And welcome to another video on accounting. We will continue our discussion with adjusting entries. So in our previous two videos, we talked about the reasons for adjusting entries, and we also talked about the first of the adjusting entries. Now there are four adjusting entries. So we have prepaid expenses, accrued expenses, unearned revenue, and depreciation expense. In our previous video, we talked about prepaid expenses. Just as a reminder that we need adjusting entries so that we can update and report correct amounts for assets, liabilities, and owner equity. To get more background on this, please watch the other video entitled Reasons for Adjusting Entries. So in this video, we are going to talk about the second type of adjusting entry, which is accrued expenses. Now, this line represents the life of a business. The life of a business is divided in two periods. We call them accounting periods. So we have accounting period 1 that runs from 1st of January 2024 to the 31st of December 2024, and so on. Now, this accounting period is 1 year long. So, whatever happens in that particular 1 year, the business keeps track of it and prepares financial statement at the end of that year. However, management prepares financial statement more regularly. So they divide each accounting period into months, and then they prepare financial statement for each month so that the management knows how the business is doing. Now, each month then becomes an accounting period. So January would be an accounting period, February, March, and so on, because financial statements are prepared for it. So let's get back to what accrued expense is. Now, accrued expense is a service that is used in one accounting period. So say that the vehicle repair service or utility services were used in accounting period 1. Let's take that as January. But they are paid in another accounting period, say February. So the important thing is that accrued expense, a service is used in one period, January, but paid for in another period, February. That is an accrued expense. Now for us, the important thing is to know what is the accounting for accrued expenses. So in period number 1, say January, since these services are used, they become expense. So by now you know that anything that is used becomes an expense in accounting. An expense is debit. So what is it that was used? Well, vehicle repair was used, so it will be vehicle repair service. The second example is utilities, so utilities expense will be there. And since we are not paying them in period number 1, it creates a liability. And that liability starts with the word payable. So the double entry is going to be debit your expense because we used a service, and then and use the name of the service. So in this case, vehicle repair expense or utilities expense will be debited. And since we are not paying it, we will create a liability with the word payable. Now we add the name of the service that is used to the word payables. So we will have a name called repairs payable credited or utilities payable credited. In period number 2, say February, when it is paid, we that will decrease our cash and will decrease the liability as well. So we are going to debit repairs payable and credit cash. Now the second one, by the way, is an adjusting entry. So let's look at some specific examples of each type of accrued expense that you will encounter in work life. First of them is bills. This line represents an accounting period. So you have an accounting period running from January 1st, 2023 to December 31st. But we have some other dates on this line. So December 1st, 2023 and January 5th, 2024. Now, ABC Limited received a phone bill for $60 on December 31st, 2023. Now this bill covers the usage from December 1st to December 31st. But this bill is going to be paid next period, January 5th, which is another period. So this makes it an accrued expense. Why? Because a service is used in one accounting period, December, but paid for in another accounting period, January. So now on December 31st, we need to record an accrual. An accrual means you have to record this as an expense. So since a service is used, we are going to debit that as an expense. What is the name of the service? Phone. So we are going to debit phone expense $60. On December 31st, we did not pay it, so that makes it payable. So we will add the word of the service that is used, so it will be phone payable credit. But generally, businesses will use the word utilities payable as well. On January 5th, when it is paid, cash will be credit and the liability utilities payable will be debited. So, and the adjusting entry is, by the way, the first one. So it's a bill, a service that is used in one period but paid for another period. Let's look at an example. Salaries is the most common example of accrued expenses. So here again, this line represents the accounting period. So here is an example for salaries. The employees work for us in one accounting period, but then you see that these employees worked in the last 2 weeks of December 2023, but they will be paid on January 4th, 2024 in another accounting period. Now this makes it an accrued expense. They work in one period and get paid in another period. That is an accrued expense for the business. So on December 31st, 2023, the business has to record an accrual. And since the business used a service of employees, which we call salaries, so salaries expense will be debited and we are not paying them on that date, that means we will credit a payable and add to the payable the words of the service used, which is salaries. So we will credit salaries payable on December 31st. On January 4th, when we pay them, obviously cash will be credited and debited will be the liabilities account, salaries payable. The third example has to do with interest. This is the second most common accrued expense. So here are the dates again for the accounting period. So on December 1st, ABC Limited took out a 10,000 loan at 6% for 3 months. Now this loan was used for the first month, December 1st to December 31st. So ABC incurred interest costs for the first month. So at $10,000 for at 6% for 1 month is $200. So now this will be obviously paid in the next period, which makes it an accrued expense. So ABC incurred interest cost, which is the cost of using somebody else's money. So that's an expense in one period, which is December, but will be paid in another period. This makes it an accrual. So on December 31st, ABC Limited has to record an accrual. So it will debit interest expense because that is the cost of using somebody else's money, in this case the bank's money. So debit interest expense. And since ABC will not pay that on December 31st, it will credit a payable and add the word interest to it. So it will be credit interest payable. On January 5th, it will obviously pay it, so credit cash, and debit will go to interest payable. The first entry is the adjusting entry. Now let's look at the last example. This is utilities here. So again, this line is the accounting period representing some dates on accounting period. So here is a service that is used. Utility service, water, heating, lighting, electricity service is used in period number 1. But the bill or invoice arrives in another period, which is January. So it is service that is used in one period in December, but it arrives in another the bill arrives in another period and is paid in another period. So this makes it an accrued expense. So as at December 31st, we need to record an accrual. Since utilities was used, we are going to debit utilities expense with $320. And since we did not pay it on that particular date, it will be a liability with the word payables, and add to the payables the word of the name or the name of the service used, in this case utilities. So we will credit utilities payable. You might be wondering how I came up with the word 350 even though no bill was received as at December 31st. Well, the accountant for that business must estimate based on past experience how much it could be. So when it is paid, obviously, cash will be credited and a debit will go to utilities payable account. All right, so that was accrued expenses. So just to give you an overview, just to give you a summary, so accrued expense is an expense that is incurred in one period but paid for another period. So used in one period but paid for another period. So at the time of usage, we are going to debit an expense, and whatever service is used, use that name, such as utilities expense, and credit a payable, but remember to add the word, the name of the expense or the name of the service that is used. So it will be credit utilities payable. And when it comes to the time to pay it, entry at the time of payment, we will credit cash and debit our liability payables. So this was an overview of this was accrued expenses. I hope that this video was helpful. Remember to like, subscribe, and hit the notification icon so that you can get more videos. And I will see you in the next video.